If you're still investing in the same real estate markets as you were just 5 years ago, you could be making a massive mistake. For decades, investors have been flocking to major cities and to the coasts. But the markets have shifted dramatically, and the numbers just don't make any sense anymore. Rents are not keeping up, operating costs are going up, and landlord-tenant laws are on fire. Meanwhile, big investors are quietly moving their money elsewhere. And they're moving their money into markets where business is surging, demand is booming, and markets are more affordable. And I'm going to go over where the smart money is going and everything you should know. So there's two things that investors need, and it's money and it's people. I always say real estate does not do well without people, and it certainly doesn't do well if there's no money. So first, let's look at people or the public. Why would somebody go somewhere or leave somewhere? Number one are just the high costs. The high cost of housing, the high cost of rent, the high cost of taxes, all those kinds of things. That's one reason. Two is safety. Now, we're starting to see this more and more and more in like downtown areas of San Francisco, for example. Three is work. Employers move around, and I'm going to talk about this in a minute, but it's the same reasons that people move around. High costs. But where employers go, jobs go, and people go. Family and weather are, of course, a couple more. But as you start to look at these migration patterns, even before the pandemic, certainly during the pandemic, and even now more, what's really starting to emerge is where corporate is going or employers are going. Because as we saw back in Detroit, when all the auto manufacturers moved out of that city at the time, was the 5th largest city in the country. And now it's lost almost 1 million people. In 2014, there was a video on YouTube that said you could buy homes in Detroit for $1. That kind of sparked my interest. And so Robert Kiyosaki and I got on a plane and we flew into Detroit in 2015 to go take a look at this, because it was like, where can you find homes for $1? But we went there, but of course, these $1 homes needed lots of work, and they were in bad neighborhoods, and there was lots of crime and all kinds of other things. It's the last place we would have bought, because one, we would have the renovation costs, but two, why would people be offering homes for $1? It's because what they really wanted were the taxes, the property taxes, which at the time were just $2,000 or $3,000. But then you had to try to get a renter there after you renovated it. So we left there without buying anything, of course, but you have to understand why. There's no jobs, crime was high, the quality of living was bad. So whenever you're buying real estate, it needs people. And there's no better story than Detroit to show exactly why, even when the house is basically free, there's no reason to take it on because you can't get anybody to rent it. And of course, we're in the business for cash flow and capital gains and all those kinds of things. Well, you're not going to get cash flow in areas that we were looking at. So while the areas we're talking about aren't as dramatic as, let's say, a whole auto industry moving out of a specific location, the house prices dropped a lot, and there's no people to buy them, no renters, and the commerce just basically stopped in this area. And we're starting to see that on a small level in many, many cities, counties, and states based on the same factors. All over the internet, you're seeing lots of stories about employers moving from certain states, mostly from California. If you just Google it, you'll see they'll come up all the time. So what are some of the reasons that an employer would actually leave a state and move to another state? Because it's extremely expensive. I can tell you what they are from personal experience. Number one is access to talent and labor costs. So if really good people have the ability to move, they're going to go to places for the reasons like I just mentioned. So employer moves to an area because they want to work with the city or state governments locally. Employers move for the same reasons that people move. They move for the high costs. They move for the safety. They move for the access to talent. They move for the high cost of labor. If their employees can't afford homes and they're renting, they move because of transportation. They move also because of tax. So if you take a look at corporate tax, for example, there are states out there that have zero corporate tax, like Wyoming as an example. Then you have states that have really high corporate tax, like New Jersey, of course, is the highest. California is extremely high, almost 9%, whereas Arizona is almost half of that. So as a corporation, which most people don't think about, it's pretty expensive in some areas and not so expensive in other areas. So if you have lots of employees and you're doing lots of commerce, tax is a big topic. So you've got the corporate tax, you've got the sales tax, and then you just got all the fees and regulations and all the other things that are required just to do normal business. Not to mention that if that money pours out of your company into your personal life, then you have individual tax. And of course, California is one of the highest. So that's the people. But now let's take a look at the money. So let's say you're a lender and you want to invest in Oregon, let's say, or Florida or New York. You have to consider all the high regulations that are going on. You have to consider things like rent control and rent caps. You have to consider the high cost of insurance, the high cost of property tax, etc. So it should be no surprise that one of the wealthiest groups that I met with recently, and I said, where's all the big money moving? He said specifically, we're staying away from the coasts. Because it doesn't really matter if it's in the form of debt or it's in the form of equity. When there's additional risk on top of that, it can affect the performance. It can affect the returns over the long term, especially when you have high regulatory states with governors that are adding more and more costs to that state and people are leaving, just like California. So it's going to be a very interesting thing for you to watch, because as the high cost of housing, the high cost of rent, the high cost of regulations, and all these other goofy regulatory things start moving people around, just like we're starting to see, what it does, it creates boom and bust in various cities and various states. A lot of people are wondering how Trump's policies are going to affect their investment. The truth is, whenever there's change, there's opportunity. The truth is, when there's change, there's opportunity, if you know how to spot it. In my upcoming webinar, How to Invest During the Trump Administration, I'll walk you through exactly what's happening, where I'm personally investing, and how you can take advantage of this unique market. Click on the link below to sign up. This is precisely why you're starting to see the migration of people and businesses move into states like Texas, Arizona, Tennessee, the Carolinas, and in some cases, Florida, even though it has a very high corporate tax. We're starting to see a lot of individuals move there specifically because of the weather and retirement. So as you start to take a look at where you're going to invest, you really need to take a look at where employers have it much easier to do business. That's something that you should be focused on in the future, because they're going to attract the employees. They're going to find the best talent. The employees are going to be happier because rents and housing prices are going to be less, and just general living expenses. Those are the markets you should be investing in, either equity or on debt. So if you're still considering investing in a coastal state, you should really take a look at who's in office and what their regulations are in place and what's coming down the line. Because in the state like Washington, where I came out of, all my friends are saying things have changed so much in the last 20 years, and it's really pro-tenant. What you want is an equally balanced state. It should not be pro-tenant, it should not be pro-landlord. It should be both. It should be equally balanced. And so a lot of people say, is it pro-tenant or pro-landlord? I just say, is it equal? If you have a crappy landlord, the tenant needs to be able to do something about it, and vice versa. If you've got tenant problems, then the landlord should be able to do something about it, and it should be fair. Stay away from the states that are pro-tenant. And if you want to see how you can buy your first rental property in 2025 for $0, click here.